Welcome back, fellow investors and traders. Jeff here with another video. And at the time of this recording, GameStop stock is trading at $99.27, down 56% today. AMC Holdings is trading at $7.71, and it's currently down 41%. And as I look through this watch list, I'm seeing all of these high short interest stocks being sold off massively today. So this revolution that we have seen in the markets takes yet another wrinkle, okay? These stocks have seen these massive runs over the past couple of weeks. You know, of course, GameStop trading up over $400 a share. AMC Holdings was trading over $20 a share at one time. Now they're regressing, and I'm sure a lot of people are looking for an answer. Why is this happening now? When these stocks got squeezed so hard, why are they selling off so massively today? And that is what I want to talk about in this video. Again, to be clear, we are really in uncharted territory. We've never really seen a large group of stocks like this being pushed. So this is a whole new world that we're being introduced to, and each day is going to bring up new events. So very, very hard to predict any kind of real trends here. From my point of view, as far as getting in some of these stocks, I felt like I was late to the show, okay? By the time the Reddit users have already pushed these stocks up to bigger levels, I felt like they already ran enough. I started keeping my eye on GameStop when it was up around $80, $90, and $100. I had no idea that it was going to run to $300 and beyond. And let me be clear that this was a very, very high-risk venture. If you did get yourself involved in these stocks, this was going to be a very, very high-risk position. So feel free to go down in the comments, share some of your experiences with this. Did you get involved with any of these stocks when they were cheap, you know, like GameStop when it was $2, $3, $4, $5, maybe even $10? Did you make some bank here? Did you end up getting caught losing money on this? I feel like there's basically 5 big things in play as to why GameStop and AMC are tanking today. Then I even want to go a step further, okay? I want to talk about perhaps investors or traders who are only investing or buying shares of GameStop and AMC, why they're kind of experiencing the negative side of this euphoria now, and how you always have to kind of look at these things as short-term trades, not necessarily long-term investments unless you really have belief in the company. So I've made chapters for these videos. I'm going to go through 5 different reasons why GameStop and AMC stocks are not just tanking, but why, if you kind of leaned into these stocks and started getting involved with them, why your portfolio is probably, you know, feeling the negative impact now. So before we get started, guys, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So let's talk first about the most obvious reason why you're seeing this big sell-off in GameStop and AMC. Guys, that is profit taking, okay? Now, there is this big principle being pushed in Wall Street bets to hold the line, continue holding these stocks, and remain unaffected by the short-term price movement. But I can tell you from looking at level 2 charting pretty much all morning and afternoon, a lot of people are selling out of this position, okay? The stock price did not get this high, did not get up to $300 or $400 without a lot of people holding the line, without a lot of people holding the stock and then buying more as the price went up. But any basic level 2 charting will more than show you there is sell order after sell order going in to sell hundreds, thousands, even 10,000 shares of GameStop stock right now. So what is happening now? A lot of people are liquidating their position. They're selling out of GameStop stock. They're selling out of AMC because people that were in this movement from the very start are starting to see their gains being trimmed more and more and more down. So a lot of people are just trying to get out with maybe a 5 or a 10x gain. A lot of people are going to be taking a loss here. But the liquidation process has begun, and more content too is coming out telling people, hey, sell out of this stock. This isn't a good one to hold long term. There's a lot of regulation on the amount of shares you can purchase, and that is loosening as the week goes on. But for now, everyone feels like the big run is over. And despite an irrational price movement, there's a simple explanation of what happened in recent days with GameStop. By using leverage to purchase GameStop call options in large, retail traders forced market traders who sell those call options to hedge themselves by purchasing the common stock, which in the end leads to the appreciation of the share price. So as that buying spree has continued, market makers had no other choice but to purchase GameStop at market prices in order to properly hedge and not overexpose themselves. As the appreciation continued, multiple margin calls were hit, and big short traders were forced to liquidate their short positions, in the end pushing the GameStop price even higher. And a lot of that has cleared for now, okay? A lot of that movement has cleared for now, and now it's back to the people who were just buying the stock back when it was under $10 a share, perhaps under $20 a share, and they're seeing if they continue to hold, they're going to be holding the bag. This sell-off is probably going to continue for a while. So people that had large positions in GameStop and AMC are moving out. They're taking their profits, and you can't really blame anybody for doing that, because that is the whole idea here. Nobody wants to be an unprofitable trader. Everybody is trying to make money doing this. Now, another thing that is playing a factor in the massive sell-off in these stocks, and what I feel is a very emotion-filled misunderstanding of what is going on here. What I'm seeing is a lot of people kind of lashing out at their brokerage in availability in some of these shares, or the limitation. You can only buy 10 shares, you can only buy 100 shares, and you're seeing these limits kind of change day to day, when in fact that is actually the clearing firms that are making those regulations by charging a higher level of collateral before these shares can be purchased. So these brokerages have to be liquid enough in order for when you sell a stock or you sell a set of options, that money is going to be in your account. If they simply just let this problem persist, did not put a limitation on it, they would not have the liquidity to have the money in your account by the time the fund settled. Now, one thing I will point out I think is very suspicious, Robinhood actually has their own self-clearing. And so I can understand all the frustration with Robinhood due to the glitchiness. A lot of the times the app is down, and it might be right there at market open, and the app is being very glitchy, or the website is not responding properly. But I think those problems go far beyond this one. I think Robinhood seems to have a lot of issues just beyond what we have seen out of them lately. And one thing too, guys, reach out and do your own research as well. There is many different clearing firms. There's Apex, Broadcourt, Merrill Lynch, Professional Clearing, Goldman Sachs, JP Morgan has their own clearing, Pershing, Southwest Securities, Wedbush Securities, and of course Robinhood is a self-clearing company. I'm going to have some graphics come up on the screen now. Like I said, feel free to reach out to some of these clearing firms. Maybe try to have an email conversation. Ask if you can have a Zoom meeting. As a matter of fact, I'm working on that behind the scenes right now, reaching out to some of these clearing firms to allow them to clear the air instead of directly blaming the stock brokerages. Maybe some of these clearing houses can help you understand why there is certain restrictions and limitations on buying the amount of stock in some of these companies. Now, a third and a very big reason why you're seeing the massive sell-off in these stocks, guys, is hedge funds are now doubling down on their short sales, and people are buying put options against these companies, okay? I would say there's probably a very large percentage of even retail investors who made money on the long side of this trade, and now we're going to attempt to make money on the short side of it, either through shorting the stock or buying put options and trying to double or quadruple or 10x your money playing put options to the downside, okay? People are starting to see the shift in the stock price, and they want to chase that momentum back down. And for people that are new to the stock market, don't have a lot of experience, I'm sure it does seem like manipulation. However, you or anybody that wants to can go short on a company or buy put options. As a matter of fact, I have many videos here on YouTube explaining how to buy call options, how to buy put options, how to buy and sell stocks, how to short stocks. Okay? So right now might be an opportune time to go short or perhaps place a put options bet against GameStop and AMC. And this is unfortunately turned into a spending contest that large hedge funds are going to win temporarily. Now, I'm not saying that this trend can't reverse once again. I'm not going to say GameStop's going to get down to a certain level where it's cheap enough and enough restriction has peeled off where they can start pushing those stocks once again. I'm absolutely not saying that. I'm taking this ride with you and just trying to observe and learn as we go. But right now the money is on the short side of things. And a lot of those hedge funds that did go short on GameStop perhaps lost billions of dollars, see an opportunity to make some of that back going short on them, by doubling, perhaps tripling down on their short position, or perhaps dumping a lot of money into put options in an attempt to continue pushing the stock price down. Now, these last two things I'm going to talk about are not necessarily the reasons why GameStop is tanking and why AMC is tanking. It's a little bit more of the highly emotional response that we're seeing in social media right now, where people are saying, you know, I've just lost my fortune, or, you know, all the money that I've invested into these companies, I've lost every bit of it, and now I'm red. Is that I want to stop you right there. The people that are caught in these situations have a serious lack of diversity in the stock market. Pretty much all of my positions were positive today, highly in the green, because the traditional markets, the Dow Jones, the Nasdaq, and the S&P 500 were both taking large gains. And even anybody that's in Trade Alerts Pro, that's my stock market course over on Teachable, knows a lot of our investments performed extremely well today, while there's being so much negativity and what I like to call the negative euphoria now, the unavoidable downside to these two particular positions and perhaps other high interest short sale positions. So if you just went out and loaded your portfolio full of GameStop stock and GameStop options, you might have been in some serious trouble today. That goes back to one of the first rules of investing and trading. You must have good diversity in your portfolio. You can't just put all your money in one position on some kind of big run like this and hope to get results. So if you are invested in these stocks, you think the bottom has set in, perhaps you go out and you buy again. But I think there's going to be more downside and potentially more upside once these restrictions have been lifted. Just keep in mind, spread your money out and get invested in a lot of different companies. The people that really felt the pain today, like I said, were overly leveraged into these few positions, and we're banking on something to happen in just a matter of a couple of days or weeks. That did happen, and perhaps they didn't sell at the right time. And now lastly, the last thing I do want to talk about. Like I said, I know there is a full sheet of these high short interest stocks that grew during this period of time, but I'm going to just kind of keep it to GameStop and AMC. I'm going to talk directly about those. Neither one of those stocks are a very good investment, and that goes by pretty much any metric you want to look at. If you want to look at company earnings, if you want to look at quarterly revenue growth, if you want to look at yearly revenue growth, if you want to look at year-over-year earnings, any kind of metric you want to pull up and look at is going to tell you GameStop has been a failing company for the past 5 to 6 years. AMC, another failing company over the past, maybe 6 to 7 years. As we've moved more and more into streaming, people have gotten away from going to the movie theater, and then the COVID-19 pandemic just accelerated that problem even worse. So these companies, neither one of them was a good investment in the first place. So chasing this trend and jumping in at an opportune time doesn't necessarily make them good investments, because everything in their future points to the stocks trading down. So at no point were these stocks being recommended because of fundamentals, company growth, company earnings, anything of that nature. It was all short-term hype, and of course, the high interest in these short sales, okay? Kind of beating the hedge funds. This was a very exciting thing, and we have not seen the end yet. Nobody knows exactly how this is going to end, but just keep in mind, this is not investing, okay? This is trading at best. This is not real investing, okay? Your money should be invested into good companies. Microsoft, Apple, Google, Amazon, Netflix, Tesla, those are companies that you can invest in year after year after year, pretty much any market conditions, and your positions are going to grow. Even when they fall back several, 10, 20%, and those stocks get corrected just like all stocks do, always an opportune time to buy more. Where GameStop and AMC, really, they have been flirting with bankruptcy, on the verge of bankruptcy for many years. So that is another reason probably why you're going to see these stocks sell off more, is because your traditional investor is not going to come in and buy these shares even as they get cheap. But that's really all I got for the video, guys. Go down to the comments, share your thoughts and opinions with me. Let me know what you think, and let me know if you think I've left anything out of this video. Is there other reasons maybe I'm overlooking, or is there something you would like to add? I always do enjoy hearing that and talking down in the comments. That's all I got for the video, and thanks as always for watching.